All right. Just let me know how the audio is. Can you guys still hear me? Because I'm currently recording. Picture frozen. Um, Sounds okay, and picture is good. Audio is great. Okay, awesome. So I'm going to get straight into it again. I only have one laptop with me. So I'll come back to your guys' questions. All right. You guys can spam the chat if you want, then I'll come back after I'm doing the breakdown. Okay, let me just share the screen. All right, guys. So yesterday, this was our trade setup. All right, this was our trade setup. I'm just going to come back to the Discord just to make sure that you guys can you guys see my screen, right? Double checking one more time. Yep, okay, awesome. Thanks, Etra. So this was the setup yesterday. All right, we took buys at 20,011. Our TP1 was 20,197, right? And our TP2 was 20,286. Right? So the reason why we got into this long position was again because of our bias. Right? Every single time that you trade, you need to understand what your bias is. Is it short or is it long? Right? Are you bearish or are you bullish? Right. So because of how the day closed yesterday, the day before yesterday, my bias was bullish. Right. Um, in the previous analysis on Monday that I did, we had a head and shoulders pattern. Right, a head and shoulders pattern. So I took this long position purely off a retest of yesterday's high, the right shoulder, right, and also this 4-hour trend that we have over here. Uh, yeah, I can hear you. Let me try one more time. Uh, can you guys see it now? Just a black screen. Uh, yeah, it's no, all good, all good. Um, yeah, all application windows. Alright, and then over here still can't see the charts. Uh, no, I'm doing the um whole whole window. Share entire screen. Great, let's double check. And this one over here. Okay, awesome. I appreciate you, Etra. Thanks so much, bro. All right, amazing. Thanks so much, man. All right. So, Etra saved the day because otherwise you guys didn't see the chat, but you guys would have just seen nothing. So, shout out, Etra. Appreciate you, man, for coming on. So, I'll re explain what I just said. So, um, again, when you are trading, right, you need to have a bias for the day. Right? Are you bullish or are you bearish, right? So, because of how Wednesday closed, my bias was bullish. Right? My bias was bullish. And then, if you can see the live market recordings that I did on Monday, you'll see that we essentially had a head and shoulders pattern. Right? So, these purple rectangles on the chart, right, are areas within the head and shoulders. The bottom one is the base, the middle is the shoulder, and the top is the head. Right? So um, the reason why I took longs at 20,011 was purely because of a um, retest on yesterday's high, retest on the shoulder, as well as this 4-hour trend. Right? So over here you can see retest on yesterday's high, retest on the right shoulder, and this 4-hour trend. But I kept in mind that I also had a fair value gap at the bottom. Right. So, like I said on stream yesterday, that us getting into that position that we got into yesterday isn't necessarily going to be the best position, because of the fair value gap. But that's why we had a relatively larger stop loss, right? So we had a stop loss of roughly 100 points. So once price came in and I got confirmation on 5-minute time frame, we had a little bit drawdown, and this was also because of the fundamentals that were happening. Trump was speaking about the trade exchange with the UK, so there was a lot of volatility in the market. Okay, so the moment price came into this 5-minute descending trend line, we moved stop loss to break even, just to put our risk off the table. So at that point, the trade looked something like this. All right, stop loss was at break even, and we were waiting for TP1 to get hit. The moment TP1 got hit, all right, we essentially would, at that point, you can either take close a portion of your position or continue holding. I always recommend that TP zones, it's a good idea to close a portion of your position. All right? So we closed a portion of our position. Unfortunately, we just missed TP2. Now, why is TP1 TP1? All right, TP1, you can see over here again, that's why I constantly draw stuff on the chart, just because you need to kind of lay out the obstacles in front of you. All right, you have to lay out the obstacles in front of you so that you can see how the traffic is looking. So if price comes into a certain area, you know when you should exit and why you have to exit. Okay, so the reason TP1 was here was because of last week's high, and as well as the head of the head and shoulders pattern. Right, we also have the 5-minute trend over here, but we have essentially 3 reasons why. All right, last week's high, 5-minute ascending trend line, and the head of the head and shoulders pattern. Okay, so that's why it was TP1. Now TP2 was a 1.618 Fibonacci level. How did we get that? Is because of our bias yesterday, right? Remember, because we long, we will take our Fibonacci from the top to the bottom. All right, here's our golden zone, and you can see our 1.618 Fibonacci zone. So that was essentially our TP2. All right, so that was our trade yesterday. Pretty decent trade for our first stream. Now, again, one question, Eve man, right, on the Discord, you said that typically, the old strategy, you would have like a set stop loss. So the reason why I don't have set stop losses is because, for example, because I had a lot of confidence in this area, if I had to just have a 50-point stop loss, all right, I would have gotten taken out. And I'm purely just putting my stop loss in an area just for the sake of having a 40 or 50-point stop loss. Okay, so in situations, well, in terms of my strategy, I like to have my stop loss in a area where I know once price comes into that area, my bias is incorrect. My trade is no longer valid. And you can't necessarily just have your stop loss randomly anywhere. It needs to be in an area that makes sense, right? So the reason why I had my stop loss at, let me just redo, over here, was because if price had to fill the fair value gap, which it did, right, and break into this 4-hour descending trend, the market would essentially flip. All right, so my bias would no longer be bullish, it would be bearish, subject to it staying below that trend line. Okay, but we came really, really close to stop loss. Look, like it wasn't the most perfect trade, right? Because it came really, really close to stop loss. And if your price points were slightly different to mine, in terms of like, let's just say, right now price is at 20,098, and let's just say your price right now is 20,090, you most likely would have been stopped out. So it's always good to know the price of my chart versus compared to your brokerage or your prop firm or um, the feed that you're using. So that's essentially how we got the trade yesterday, why I entered, why my TP zone is my TP zone, and why my stop loss is my stop loss. All right. Now for today, today's outlook on Nasdaq. Okay. So fresh start. Um, Again, just like any other day, right? What I always like to do is just kind of clear the unnecessary traffic for now. Okay, so we're taking away those trends. This trend might not be useful. So same thing what we do, we need to see how the previous day closed, right? So right now we're on the 5 minute, let's go onto the 1 day, reset the chart. So on the 1 day, we can see um, Wednesday closed bullish, and because it closed bullish, that's why we were bullish for the day. Uh, Yesterday closed bullish, all right? So I would be bullish again today. All right? I would be bullish again today for Nasdaq. So how we start, same like every other day. It's literally rinse and repeat. All right, rinse and repeat. Um, let's just wait for that chart to load. While it does load, just want to make sure I'm coming back on the Discord. Everything's fine, right, guys? You can hear me. You can see the chart. Awesome. Again, Etro, thanks so much, bro. Appreciate you really. So we're back on the 1 hour time frame. All right, let's put our Picasso back on. So yes high and yes low. That stands for yesterday's high, yesterday's low. All right. So today being Friday, the 9th of May, all right, we need to establish Thursday's high and Thursday's low. All right. So Thursday's high we have over here. All right. And then Thursday's low, all right, we have over here. All right, so that's essentially our daily range, all right, for yesterday. All right. Now remember, because our bias is bullish, all right, what do we do with our Fibonacci levels? We take it from the top to the bottom, all right, and we identify our golden zone. What is our golden zone? Our golden zone, excuse me, uh, our golden zone is essentially our 0.5 and 0.618 Fibonacci levels. Right? And we can see already that price is playing on our golden zone as well as our 4 hour trend line. Right? So price is playing above our golden zone and 4 hour trend line, which is exactly what we would like to see. Okay? Not only do we label our golden zone, all right, we also have to label our 1.618. All right. Now, why do we label our 1.618? Because we are looking for longs. Right. Because we are looking for longs, we need to have an exit strategy. All right. We need to have an exit strategy. Now, if you look up on this chart, I also have last week's 1.618, right? Which is still where I would like price to go. Will we get that fulfillment today? Most likely not. All right. But we're asking for essentially 800 points or 8,000 pips for Nasdaq, right? Which is a big ask. But 20,500 to from 20,100, it's pretty attainable. All right. So purely based on this, is this enough? Is this enough confluence on our chart? Right. Right now, the only thing that we have is our head and shoulders, which essentially will act as support and resistance. All right. We have a 1 hour descending trend and a 4 hour ascending trend, as well as our golden zone. Last week high and last week low. Right? But what we do now we dissect it even further. We go into the 15-minute time frame and we try to see if we can identify additional confluences. So additional confluences would be your trends, descending or ascending, or even fair value gaps. All right. So over here, right, we still have a fair value gap, and how you can identify a fair value gap is what I like to do is take a gram box. Okay. So whenever you see an imbalance in price through a candle, right, how I identify that it's a fair value gap is I ideally need that candle to at least fill 50%. Right, so how you do that is you take your gram box, boom. Right, so this candle that was extremely bullish got filled. All right, got filled. Now this price over here, all right, this candle over here, we still have a fair value gap further down, right, which is also aligned with our right shoulder, okay, as well as the 200-day moving average. All right, so we have our fair value gap over here. Now I can also see a, let's take this over here. All right, we have a 15-minute trend as well. All right, so to be very honest with you, right, with this kind of setup at the moment, I would either wait for price to fill this fair value gap and start trading above the trends. All right. So once price fills this fair value gap, we could either uh, take a long position over here, which is on the right shoulder fair value gap and possibly the 200-day moving average. But this area isn't necessarily a safe area for me, right? Because I ideally like like the moment we start trading below our golden zone, remember that's below the previous day's 50%, right? It could lead to a bearish day. Okay, so I only really like taking longs if we above our golden zone. Okay, so a position like this could be good. Um, Something like this. All right, that could be scenario one, right? But I'm not necessarily a big fan of the scenario. Okay, our SL would be on the base of the head and shoulders as well as below yesterday's low, and again this trend line. Okay, it's kind of the same setup that we had yesterday. Okay, uh, but the best case scenario is our fair value gap getting filled, price trading above our golden zone and trading above this trend line, and then we'll probably take our stop loss, put it below um, the uh, the right shoulder. We would aim for this. Okay, so that's the kind of setup that I would be leaning more towards. Again, first TP would be this. All right, first TP would be yesterday's high. But we would be ideally aiming for 20,500 from 20,114, right? Which is roughly a 400 point trade or 4,000 point trade. So that's set up for today with Nasdaq. That's what I'm looking for. Again, we have this fulfillment below over here, but us just taking the trade purely off that fair value gap and trading below that golden zone, I wouldn't necessarily be super keen on that. So first of all, I need price to fill that fair value gap and then start trading above the golden zone. Then I'll be looking for longs. If price fills the fair value gap and is kind of consolidating below the golden zone, I won't be acting until we trade above the golden zone as well as the trend. All right. So I'm going to go back onto the Discord. I'm also just going to end the live stream recording. And if you guys want to rewatch the video, you will be able to under live markups. All right. Let's go over here.